The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman on this 28th day of June, wrapping up June in another few days. Amazing how time flies. Half the year just about flew away. And thank you to our hosts earlier on. Hope Tom gets better. He was scratchy, but still pushed through and did the show. Great show. So let's do the market. Dow's up 127 at 17,268. S&P's up 17 at 2,018. The comp index, if I can just get rid of this for a moment, the comp index is up 62 at 4657. This is going to be very interesting. You've got Britain is up 176. What is this? 161 at 6144. DAX is up 194 at 9465. Gold is down $8 at 1317. Silver's up 8 cents at 1782. You've got high grade copper up 4.5 at 216.70. What a mixed market. And crude oil is up 80 cents at 47.13. Bonds. Now, you'd expect bonds to be down about 1.5 points. In fact, where are bonds? The USU 16 is at 173.09, up 4 cents. Isn't that something, huh? And you've got the dollar at this point. The dollar earlier was up, was down with gold. Still down. It's down 35 cents at 96.35. The VIX index is at 19.54, down 4.31. I'm down 19.87 at 397. So we've got the numbers out the way. I was asked if I wouldn't mind just having a quick review of the 10-minute chart. Some people seem to think that is very helpful, so let's do that. There's the E-mini. Remember yesterday I spoke about in the Chapman wave, we've gone to a trough C, and I anticipated that there was a chance of a bounce and maybe a retest. And then in Elliott wave, my analysis of Elliott wave, I have a couple of people. Of course, I don't do Elliott wave strictly. I do it based on my Chapman wave methodology, and I found it to be quite successful, actually, using it that way. It allows for those questions that you always get in Elliott wave. It answers them because I have a myriad number of Chapman wave methodology techniques. So let's just look at this. What happened is we went down to 1981.50, all the way from the 2022 level. And that was at 11 o'clock as my show was starting. And then I had circled to say we could have a bounce, left side, right side, price, time matched, and how it could happen. It was looking lousy. And boom, had a little rally that went all the way to about 1994. I said, it's got to break 1994 and start to move higher. Otherwise, it's going to stall. Well, it did stall. And it spent the whole day until about just before the close, about 3:30, and then there was a sudden spike. And then that sudden spike also tested. We had 4 tests, peak C1 trough C1, trough C2, trough C3, lowercase c, and trough C4 before you had a spectacular start of a move that went peak ABC all the way to a D and an E. Oops, that should have been an inverted V that capped right there like that. And then pull back, hold the 9-period exponential moving average, go to a peak D, slide under it, left side, right side, price, time match, hit once. Was way too early. The top and D on this high right here, that was the doji candle at 4:30 this morning at 2008.75. Pulls back, goes under the 9-period moving average, trough A, B, C, D. I should have put that in. Sorry, it's a D. I usually notate those. Okay, trough D, and then we started brand new with a phantom peak A, B, C, peak D at 2018.25. I'd already put that down arrow in. I put the Chapman wave inside wedge dash resistance line. Now, I want to take just a moment to tell you, for those of you who use channel lines, remember that time is, we talk about cash. A cash position is a position. It's like being short or long or cash. It's as important. Well, trend lines are very important. But time is as big an influence as price. And sometimes time alone can get you below or above a trend line without anything happening, just the natural pullback or rally phase going from one trend line on the upside to another trend line on the downside, still rising in an up channel in this case, says that, all right, you can break it just by time alone. Well, we broke it in price and time. So now what we're looking at, you see I'd already drawn in that right shoulder fair here. This is going to be very important. I'll explain why right now, because if the E-minis at 2009 breaks 2005 one more time, you could retest the low of 2.75 that was made at 7:30 this morning. And if we have a consolidation phase now and then start to move above 215, that's 6 points higher rather than the 4 or 5 points lower, that would suggest, and I don't think it's going to happen, but that would suggest that there's enough strength to close towards the high of the day. Let me tell you why I'm a little cautious about this whole thing. For my subscribers, this is what I did. Here we go. Is that up? Yeah, there it is. I showed them this chart this morning. I showed them over the weekend. I showed them yesterday. I showed them what was going on. And you see these big, strong down arrows. You see the high that was made back in May of 2015, May the 19th in the daily chart. You see the way that there was a rollover and then a channel, and then the channel was broken. And when that channel broke, you just went straight down, kaboom, 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 in August to that August 24th low, 15,370. Then you started an H pattern that was successful, went all the way to the November 3rd high at 17,977 in the down. But then look what happened. Another channel, two parallel trend lines, create a channel, broke that channel, and then kaboom, kaboom, kaboom. And then there was this bounce. And I'm saying we've just got to be a little careful here because all the technicals are matching. And this could be the bounce that says we're not going to go all that much higher. But if we fail and take out yesterday's low at any time in the next 2 days, wow, you've got to just be really careful. So now let me move this away and show you exactly what I'm talking about. Look at that. Now we've got this inside bar with a fractional high. I can even put a gray A because it went higher than yesterday's bar. And that makes this really important because on the one hand, I'm looking at action that says Thursday's close was fabulous. Friday was an aberration. It was as if you were driving along, everything, you were following all the rules of the road, when someone went right through this red light and just, bam, smashed into you. And now you're seeing the residual effect as you came down. And then yesterday was a follow through to the downside. Because of that follow through to the downside, even with a gap to the downside, which we've tried to fill here, that's saying we are matching. And while we're matching, I cannot be overly bullish because it says patterns repeat over and over again. But when you get to the third pattern, sometimes, as you can see right here, this sharp down channel was much shorter and much more benign before it broke down. The one that went into the May, June, July, August period of last year. Then the one that went from November into the January cascade was a different pattern. And 3 times, very often, you get a conglomeration of the two. And lo and behold, we've got something like that here. I'll be back to talk about this because this is, in fact, a really important phase. Why? Because of the pattern match be going down again. I'll be back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So let me just continue. Now, I gave 3 reasons. There were actually 4 reasons why I anticipated that today could be a very strong session. And yesterday during the show, what a pity, I only do my market my opening call early in the morning. I very seldom do I give updates, and if I do, it's usually about between 12 and 1, or maybe when the Fed's on, it'll be at about 2:30. But yesterday when we were discussing this, that would have been just a perfect time to go long. But one of the reasons why, well, 3 of the reasons why I said to my subscribers why I thought that this is my overview and market today section. And I said that the 3rd session is very important today because it could produce some strength. And I discussed a number of the factors. One is that the 120-minute chart made a peak E, and that often gives you quite a sharp pullback. Yeah, you made a peak E at a sharp pullback and then went to an F at 22.89, then plummeted. And here you've made a high of 26.78 or something like that. And I anticipated we could go down deeper. That's number 1. Number 2 is the Richard Arms short-term trading index, which I call the Chapman Wave Trend Gauge, only because of numbers that I use, was very high once again. Yesterday we had the 20-point move from the Sunday night opening, and this particular index says that if it goes over a certain level, within 2 days you should get a 9 to 11 point move in the E-mini futures, which should impact positively the cash futures before they pull back again. And we saw that yesterday, and we saw that again this morning. So that's worked. That was number 2. And number 3 is that bonds, and actually let me do this live. Let me just show you right here. So number 1 is the volatility index, right there, VIX.X, had made in the 120-minute chart, made a peak E. There it is. Let me move that down a little bit. In the daily, had made a peak leg F/B, which could turn into a peak F if it was down very sharply. The TLT had shot up, gapped up to leg D, and very often money from bonds can go back into equity. So this is leg D, and if it makes a peak D, then we could maybe get a bit of a follow through tomorrow. But look at this, the TLT is at 59. Remember when I was reading the list of all the indices where they were? I said, oh, bonds are not down sharply, in fact. But look at this. The TLT's up 58 cents at 139.75. That indicates, and leg E, very strong breakout in the weekly chart. And of course, because it's a breakout in the weekly chart, turns out that it's a breakout in the monthly, and the monthly has gone to leg. It should be E/C. I'm favoring C right now, but I should officially call it E/C in the Chapman wave. And this is leg E in the weekly chart. I don't have to call it E/A because E can go to an F, can even go to a G. So there's no problem yet. The MACD is very strong. Stochastics at 87%. That's suggesting to me, okay, and that was it. There was a composite of ABC in number 3, and number 3 is gold. Gold had made a peak D yesterday, and I suspected that that was saying to me that we could get some kind of a pullback. Now, the weekly chart might have recycled in gold. I'm calling it F for now, but in the meantime, back at the ranch, we've got just 4 days. If we can go into Friday, making a new recovery high in gold, that'll extend this leg A into the 1, 2, 3, 4, 5, 6, into the 7th month. That is the most, I don't recall ever seeing a leg A go for 7 months. Look at this. This one went for 1, 2, 3, 4. And it's just very unusual. That is in gold. So that shows internal strength. And that internal strength is basically telling us that this Brexit is not going away just yet. All right. So those are the reasons why I decided that I would not, I would have gone long yesterday if we closed towards the lows yesterday and I had an opportunity this morning to go long. I would have gone long only as a trade ready to flip. And so that's to me very important. Now I want to do a couple of things. Yes, thank you, the Dan. I saw there was something nice being said there. P said, oh, Basil, should work to perfection. Thanks, Basil. Pleasure, P. It's my pleasure. Zito says, Basil, thanks for this very thorough recap. Yep, thank you. Very helpful. And get the Chapman Wave CD. Yeah, that's my opening. It's called the Introduction to the Chapman Wave Methodology. It's only available at CNN, on TFNN, and check it out. So here are a couple of things that are really important for me. I'm going to keep going back to say that the evidence thus far is that even with today's, unless today, by the end of the day, there's just some miracle that says the Dow can rally to the 17,350s, maybe another 80 points up from here, then I'll have to say to you, wow, that is a different thing. That's a different scenario. But at this particular point, I think the weight of evidence says maybe we don't go down all that much right at this moment. Maybe in a couple of days we do, but at this moment we won't. But we might just chop around as we did right over here for 3 days, and the third day went plummeting down. So I'm just a little nervous here that I don't think everything's out the way. And when I look at the damage that was done from Thursday night's fabulous close to Monday's terrible close, I have to tell you, I go through, look at this, GE having a nice bounce here, trying to make an island gap to the upside. But that weekly chart says to me, you've got that double U, like 2 lowercase u's formation that says there's a possibility it could try to form a base here. But if it breaks and closes underneath 29.06, the low of the week of the 20th, that's not good. Look at IBM. IBM failed, bounced today, failed, went to a rogue wave G. It's very unusual, this particular pattern. I call it the Chapman wave. Let me just put this in. Double camel hump. I love that. Pattern. And it's just a right arm extension, or it's a rogue wave failure pattern. And that breaks down, it's very negative. And you've gone to a C, and the weekly chart now has the same pattern, but it has already gone to a lower low. That's the second one in my Dow quartet. Look at Triple M having a good Triple M. Don't type it there. Type it in the little rectangle right there. 1, 2, 3. And Triple M, wow, I've got a lot of calls, a lot of questions coming up. And that went to an EF, maybe a G/C. So Triple M is still holding pretty darn well, close to its all-time high. It's one of the better acting stocks. But in the meantime, back at the ranch, The daily says, oh, that was real damage. A, B, we can even recycle this. A, B, C made another D and failed. I can even put a down arrow because everything technically fits. And the final one is UTX, and UTX made a peak E, and now it is acting quite poorly. So all of these are in consolidation patterns in the weekly charts. Monthly charts I can't talk about until Thursday's close. So I'm looking at this and I think there's a problem. I do want to mention this just as we're about to go to a break. ALB, and this is for one of our dinners who has this in a long-term portfolio. I've been wanting to short this. I did short it for a moment and then it gapped up, took us out for a very small loss. But I've been wanting to do it all the time since then. And now look at it. I think that Albemarle core is acting very weak right now on the daily chart, which could impact the weekly chart. I just wanted to mention that. I'll be back. Dow's only up 118, S&P's up 16, and I'll tell you what I had said in my overview section when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So this is what I had said, right? Yeah, I do this every single day. I love to call them these five, they're quintiles, but I like to say quadrants. This is the Dow 120-minute chart, made a peak D and it came plummeting down. The steepness of this move is something that portends deeper down prices unless there is a V-shaped pattern that has to happen without any hesitation. It has to be a constant thrust to the upside. It's got to take out decisively the left side high bar and hold there, and then actually start a new move to the upside from there. That's number one. Number two is the VIX index, within the context of this pattern, is still having a high level consolidation because it's in the 20s. Right now it's at 20.15. So in the 20s says, just be careful. I'm still around. Don't forget about me. This is the S&P bar chart. B minus failure made a 2120 top. Hasn't been pierced since then. And now we're looking at leg C to the downside, probably a trough C today, if it doesn't take out the low. And the leg C to the downside in the Dow chart, they're your support levels. The S&P did touch the support level. The Dow's still got a way to go. And there's the Chapman Wave Trin Index, actually is Richard Arm's Trin gauge, whatever he calls it. He calls it the Trin Index. I call it the Trin gauge. And then I give the same thing. And what I said was, I said all that stuff about the waterfall cascade that we saw, and I showed you the chart with those down arrows. And then I said, today, if the sentiment indicators are correct, gold, and a plunge into a more serious low could be just days away if it fails. So the VIX daily leg, F/B, the TLT leg D, gold leg D, well, it's actually peak D. So we could see a bounce here. Today, if the sentiment indicators are correct, as well as the Chapman Wave Trin gauge, a sharp rally should unfold. And if Dow is plus 110s or more at mid-session, that'll be like 1 o'clock, right? 1:30. The S&P plus 13s, the comp index plus 20s, the chances of a strong bounce holding increase with Wednesday early morning follow through. That means we could get some kind of a doji candle tomorrow and then start moving down towards the afternoon, or Thursday if the VIX doesn't fall into the 19s or 18s and gives a fabulous sign of a very strong, powerful move to the upside. Okay, so that's what I do for my subscribers. I'm opening call every day. Plus, of course, whoops, let me just do this one more time if you don't mind. Plus, all these, here's my opening, my Traders Corner with all the positions that we have, what we want to do if a particular ETF goes to a certain point, just a bunch of things. Follow up on our very long position, which is done since December, which is done fabulously, and a short position, which we're still holding, which is also done fabulously to the downside. Then I give all these different charts, and charts of anything that we hold I usually try to do. Now, if I'm looking at this particular chart, I mean, this is Tesla, just a question in the dead. I don't like it at all. It's not looking very good. Let me do this. Let me just run the questions real quickly. So HQU 16, HQU, HOQ, a little bit of far away, huh? HOQ 16, there it is. So I'm just going to go, if you don't mind, I'm going to crude oil because that's what I have to do. That's just better for me. We made a peak G top. We made an H pattern, and we took out the low yesterday. That says within 1, maximum 2 days, you need to close above the left side low. If you do, you could have a bit of a rally. But if the technicals are still fading and haven't given a buy signal, be careful because it could mean that you're going down. Crude oil to me looks like it's going lower. It's at 46.99. I think it's going to take out the 45.83 low of the continuous contract. If it does that, immediately we've set up a move that says that the next level of support will be in the 45 to 44 area. Okay, this has to bounce and hold in the 48.30s. If you want, crude oil has to be in the 48.30s by tomorrow. If you want to sustain a move to the upside, both in crude oil and in the market. Next question, Emily, no. Oh, and so Joseph sent back, we had this little tete-a-tete between us with the Elliott wave, talking about the, I'd said that it made an Elliott wave 5 in the Chapman wave, and we should have a bounce and there may be a strong rally. And what's really important about this is that within Elliott wave, Joe said to me, hey, if you take out the bottom of 1 in your 4 to the upside, that's not legit. And look, 4 went all the way to 2008.50, and the low of 1 was 2009.75. So we actually didn't get there. But if we even got there, I don't really care. Those are the I am permitted, because it's a Chapman wave, Elliott wave, I'm permitted to have a little leeway. And that's one of the leeways. I found that if I stuck strictly to the rules as I recall them, because I try to keep going back, I'm not very good at memorizing it, it just doesn't work. It works fabulously when I give it that little flexibility based on the Chapman wave methodology. And then Joe, and he couldn't remember which chart it was. And then I immediately last night, I said, oh, I know exactly which one it was. It was the chart of so that was late last night. And then I said, yeah. And then he wrote back to say, yeah, you're right. It was the 10-minute chart. I should have mentioned that there is one exception to Elliott wave's fourth wave rule. Wave 4 cannot enter into the price territory of wave 1 in what he called a diagonal. It can enter in a diagonal triangle. Additionally, commodities offer the most flexibility in Elliott wave analysis. Joe. Thank you, Joe. Yes, we're on the same page. That's good. Okay, now let's get out of this. And what I want you to do is go back to those questions here. So then Adam asks about Delta. You see, this is the big problem here. The airlines have gone into a very serious decline. They are not. This is one where you need all your capacity. You need every bit of information. You need your GPS. You need whatever it is, because Delta Airlines has gone to leg B, but that's not the issue. Leg B has taken out a very important low that was made back in August of 34.61. It's trading now at 33.70. Haven't gone down to the 32s. Haven't gone down to the 32s. I'm very concerned about certain airlines. So Delta is one of those. Hey, maybe he's short, so maybe I'm about Delta and the XAL. Should we be buying? No. Please don't buy the airlines. I don't think you're going to miss out much if it suddenly turns around and goes up. The way this monthly chart is formulating, together with the weekly chart, it's at 33.69. Maybe you could play a bounce to 35.70 is the 200 period moving average. But in this particular phase right now, I'd be really careful about the airlines. If I go to the XAL, dollar XAL, look at this. It's the same kind of pattern, except it's not quite as serious in terms of the break of the left side low, because it hasn't broken the August low. But look what's happened. It's got a Chapman wave, a second H formation in the monthly. The MACD is not good at all. The stochastic's failing. The weekly chart has got an expanding MACD to the downside. Stochastic showing no strength at 10%. Remember, under 20% is the exact opposite of over 80%. I love to see over 80% holding on long positions. I love to see under 20% holding on short positions. No. Please don't go to the airline index. It's just way too dangerous. And then Sarah wants to know about TLT. I'll get to that as soon as we get back. We got time for everything. I'll be back. Dow's up 119.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So, folks, patterns repeat. It doesn't matter what they are, where they are, and what's so fascinating is that you can have something in a commodity, and you can have something in the futures, and you can have something in biotech. But patterns do repeat. And if I go back to this chart here that I was talking about a moment ago, the E-mini that made that flat base restart, it went into the lowercase h pattern, which went to an M pattern, and then it started to move up in the E-mini from the 1981.50, 4 times hit low. Look at this. The question was from Adam. No, it wasn't. It was from someone. I saw it a minute ago. Wait a minute. Oh, there it is. From Bob about Goldman and Barclays and Deutsche Bank. But look, if you go to Goldman Sachs, it made a left side, right side arch formation, the same as we were talking about, the low of 139.01 on the week of the 12th of Feb was taken out yesterday because it went to 138.20. So this is the weekly bar that says you've got this week and next week to close above 139.05. If you do that, you can rally to the next resistance level, which is the 9-period moving average of 149.25, or the next peak, which is way up in the 160s. I would rather say the monthly chart has just gone to a leg C. It is just a tad above the target that I've had for a long time for Goldman, when I said I think Goldman had made a hat-trick top, meaning daily, weekly, monthly, that it could in fact test the 200-period moving average, which I think is at 138. Let me just give it to you right. 137.20. And we're at 140.02. I'd be real careful. Look, the rally tried to bounce today, and it's at the lows of the day. Just be real careful about certain stocks, and this is one of them. Let's see how it plays out. Look at the XLF. The XLF tried to bounce, failed. It's almost at the low of the day. It's in a leg E to the downside. It is under right now the 200-period weekly, so we've got until Friday. So we can't talk about the weekly other than to say it is at 21.90 and we're at 21.71 right now. So this is not so good. The XLF looks very weak, and the monthly chart is suggesting that the bottom part of the symmetric triangle will go into the Chapman wave inside track buy zone between 21.20 and must hold 20. If it breaks under 20, that's very bad. So this is a very important period right now as to what we're looking at. If you're looking at Deutsche Bank had a, look at this, try to rally, and it's at the lows of, almost the lows of the day. So there's no real sign there, because there can't be a sign. There's no security whatsoever. So I hope I've covered a bunch of those questions. Another question I had in the den was the monthly chart of the TLT. What am I labeling it? A question also in the emails. Well, I'm labeling it right now E/C. If I had my druthers, I'd call it C/E, but I always like to be conservative first and aggressive second. So right now, it's in an E. But I can tell you, if I'm looking at a chart pattern, I'm saying, okay, what would you do with this chart pattern? I say, hey, it's real simple. There's a trend line I can see without even putting it in. I'll put it in for you because you might not see it the way I see it. And that's real simple. It says that trend line should bump into resistance in the TLT, the Lehman 20-year T-bond fund. And I always like to do this. Green will mean that it breaks out if it can close decisively above. And staying within the Chapman Wave inside track. It's just such an easy technique right there. The Chapman Wave inside track says we're in it right now, but between 139, where we are, 139.62 this month, and 142.20, that's the inside track. So you can still go a little higher. So just all I'm saying is I'm calling it E to be a little conservative, but my eye says we'll go a little higher, then have a very strong rebound in the market in maybe July sometime. And then we've got to be careful because this could continue up even further. So I'm just looking at it and I'm saying be very, very careful. So I had a quick question. Would I look at the E-mini again? Let me get rid of this to make it clear. Yes, the E-mini at this point is bounced. There's a left side, right side price time match. It doesn't look like it wants to break. It'll go there to the 2,275 level if it takes out in the next 30, 40 minutes. If it takes out 2006 support, then you've got that target there. But that target expires at about 10 to 1. So the way it's looking like right now, you got your lunchtime break from the selling. You got the lunchtime break that says a little bit of upside momentum is still left. So let's look at that. I'm just making it clear that if the E-mini starts to take out and hold above this high right here of 2014.00, just less than 3 points higher, that's going to be important. That'll say, okay, there's enough strength to maybe go towards the top of the line. But at this particular point, I'm looking out and I'm saying how the market reacts over the next 2-3 days is going to be so important because of this chart right here. Okay, now we've got other charts that say like the 120-minute chart went to a leg A, it's pulled back, could be a peak A because it's 120. But if the 120-minute chart takes out the high today of 17,361 and goes to 362 or higher, that says that this moving average right here is going to be a target of 17,402. Then you could get yourself, I don't know about the V-shaped pattern. I think it's more like you have to come back and do some retesting. So it could be an arch formation. All right. I think I've covered a chunk of things. Let's go to this. Now, I had 3 things that I want to look at. One was, the RUT index. I was asked about the RUT index, and this is IWM. See, this bounce hasn't held. Oh, I'm sorry. I was talking about the trough C1, C2, C3, C4 that was made in the 10-minute E-mini chart. And I said, look at the Goldman Sachs pattern. Hey, how about this? Look at the IBB. It came within cents of its left side low of 240.03 made in the week of the 12th of February. It ran up. We were short all the way from 393. The all-time high was 400. And we took profits way down at 282, I think it was. And then we had a couple of trades. And then I missed going short after that peak D. We did go short, but just for a brief period. And we covered it. And I didn't get this last bounce to get this last move to the downside. Now, this morning, I was about to go long the IBB. And then I looked at it and I said, you know what? The flat MACD, a flat MACD and the very flat stochastic says to me, it could be a bounce. But I don't know if I want to jump around. I want to be a little quiet. We've had some big trades up and down. I just want to be quiet. But there it is, 240.30, 27 cents away from testing the low of February. That says now you can have a bit of a bounce, and we're having a bit of a bounce. I'll be going straight to Brent in Martinez, California. Brent, how are you?
I'm doing very well, Basil. How are you today?
I'm good. Oh, do I hear the music? I guess I do. You'd like to look at?
I'm back in Frontline again. I bought in yesterday.
Okay, good. Frontline. Okay, Frontline trading is 796 up 42 cents. Well, good eye. I'll be back with Brent because we've got a break coming up. Dow's up 140, S&P's up 20, and FRO Frontline is up 42 cents at $7.96. Good eye. We'll talk about it when I get back.
Okay, Basil.
Oh, but I don't hear the music. I beat the music. I haven't done that for a while. Okay, sorry, Al. I beat the music because my little buzzer that I still haven't fixed, I still haven't found that booklet. There's the music. We're going to take a break. As a professional musician, I should be able to time those perfectly. All right, we'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back with Brent in Martinez, California. We're looking at FRO, Frontline Limited, trading at 7.93, up 39 cents. So let me just do this. It's just so funny. I don't know if this is the reason why you brought it up, or whether it's just pure coincidence that we've had just a succession of these double bottoms, triple bottoms, quadruple bottoms. In this case, it is a quintile bottom. The 5, penta, is it? It's got 742 is the low back on the 24th of March. 740 was the low that started a buy mode. They went to peak ABCD on the 7th of April. $7.40. It went all the way to $9. Yeah, $9 exactly. 740 was the low on the 4th of May at 740, and it went to peak ABC. Pulls back, retest successfully at 741. It did not take it out, which means it's still in an uptrend. It goes to a D, and then it goes to an E, and at $10.41, the week, right on the 8th of June, it plummets back down to 750, making higher lows and higher highs. So you've got a great entry point, at least risk reward, because of the history of the stock at 794. This is what I'm going to suggest. Did you get it with options or anything, or you just got straight long?
I bought it for all the reasons you just espoused there, Basil. I like the fact that it's been down there so many times and tested that level. So far, it's held, and that's really my stop. Anything below 740, I would get out. And in this case, yeah, I have shares because I did own it before, and it pays a big dividend. So I have
Yeah, I remember. Yes.
I ended up getting from that, but then altogether, I have 1,000 shares of it.
Oh, if that's the case, you know what I'm going to recommend? Why don't we give it 2 days without doing anything? Because if this is going to succeed in moving up, it's going to do it independent. It's already had a great independency. The way it's moved, it's got beautiful Chapman wave peaks and troughs. So I'm going to say to you, you got incorrectly. This is the first time. This is interesting. This is the first time that it's given. One you spoke about the other, well, about 2 weeks ago, had a gap to the upside. This is the first time there's been a gap, an island reversal at the bottom. There has been a gap before, but not an island reversal. So let's see. It needs to take out $8.11. If it can hold above that, you've got a fabulous cushion. I would raise the stop on half, and I'd give myself some comfortability factor. That's all. I think you got in great in terms of a risk reward, but I can tell you this, that the weekly chart suggests that it can't stall and go sideways. It really needs to make higher highs and higher lows, because if it comes back and goes into yesterday's candle at all below 774, then you've just got to be a little bit careful, because this time it will be the quickest it's given back after a nice move to the upside. And that's the only thing I could say. So far, nice entry point. 784 is the 120-minute chart support level. If anyone wants to add that, maybe, or wants to get in, maybe that's the place. I like it. I think you got a great entry. I'm going to follow this one up. I'm even going to put it down here. So good luck with this. I think you got a great entry.
All right. Thank you very much, Basil. Have a wonderful day, and I'll talk to you soon.
Thank you very much. Good luck with this. And so that was Brent in California. Okay, let's do this real quickly, because I see there's some buying coming back in here. Whoops, not that chart right here before we wrap up. I believe I'll be back this afternoon with Tom O'Brien, but let's just look at this chart right here. Here we go. So what we're doing is trying to make a V-shape recover by not breaking down in the E-mini. This is going to be very important, because if the E-mini goes above 2015 and it can hold there, then the target will be the high that was made at that peak E-top at 20 past 3 on the 27th. That must have been yesterday, right? Some time ago, or the day before, or whatever it is. And on 27th, that was on Friday. And that was at 2022.50. That would be a big move up from here. And then maybe we'll go into tomorrow, and then we'll have to test and see what's going on. In the meantime, just be real careful, only because of that pattern that I spoke to you about. The VIX is pulling back sharply. It's now under 20. So far, yes, this is good action. And all I can say is we'll be watching to see if there's a repeat of this pattern, or we're going to actually go even higher into the Dow and the S&P and the foreign markets. We'll see. Basil Chapman signing off. Stay tuned for your swim lesson.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.